Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing. There's a lot of new information out there that people continue to share. I like to cover it. It actually gives me a little bit more breadth of visibility if other people are looking at other sectors that I might normally not be looking at. So it's good to be looking at what other people are charting. Sometimes um, they'll catch something that I'm not really looking at in a particular way in terms of the chart pattern or something like that. Another thing, I just want to make sure, like, it's not the pattern that necessarily matters. The people, the herd, humans are interacting with each other, creating these patterns because of the market conditions, and it's giving me a better read on the market conditions that are out there, and that is translating into investable assets and investments and stuff like that I'm looking at. So again, this is going to be related to three different areas: wealth building, financial topics, and or commodities. Commodities are the spot that I think are going to do very well. And commodities include precious metals. Let's dive in. Let's see what's going on today so I can give you my financial opinions. At finding_finance if you want to follow me. And if you want to join our community, finding-value.com. That's where I go over individual companies, individual sectors, what I think is going to do very well. I share, we mainly have midweek updates and we mainly have the question and answer sessions. And that's where I do a lot of my coverage of companies, why I'm buying it, et cetera, et cetera, et cetera. And I also have a lot of training out there. So we've got this first guy, Andreas. He says, we are approaching a 1970s style de facto shipping blockade. The situation is worsening in the Red Sea. No containers, soon no dry bulk, and no mid-sized tankers either. Suez Canal container ship crossings are at, it looks to be, the lowest they've ever been, even in no particular, shutdown or accident. I mean, this is low, guys. Wow. JC Parrots, he says, if you're one of those who believe that this 18-month plus bull market is about to come to an end, you're going to need to see these groups all above their prior cycle highs fail and break back below resistance. And if you think this bull market marches on, then these four need to hold. So basically, we've got the New York Stock Exchange broker dealers, XBD, broken out a little bit of a retest, and we need to hold above this resistance and continue to move on up if you're a bull. If you're a bear, you've already been violated, and you're basically on the floor figuring out which direction you're in because you've broken out of the strong resistance to the upside. That would be my opinion. Industrials XLI, we've broken out. This was your failed throw over top that people were talking about, but what if this is a reversal to the upside? That's what it sure looks like to me. We also have semiconductors moving on up out of this resistance area. And then we also have home builders. You know, the area XHB, I follow it a lot, and that's broken to the upside as well above support. So now we've got four areas, four different sectors that have broken these strong resistance areas to the upside. A lot of them are main sectors. They're not like little, know nothing sectors. This screams bull, guys. I'm sorry. Good luck with your recession calls. Um, if it breaks back down, I'll change my mind. But as of right now, I have to go with the data. This is your unbiased opinion. My unbiased opinion is that we are going to go higher based off of these four charts. And I think that's probably what JC is, his conclusion is probably something similar. Game of Trades here, he says, here is something that will get people freaked out. Bankruptcy filings are aggressively moving higher. And I'm trying to get whatever information from both sides of the camp to give you guys an accurate reading on the market. Chapter 11 bankruptcy filings rising rapidly in November. They're coming on up. So some people will say, oh man, but bankruptcies are going way up. I'm like, look, we're going higher, guys. We're going to hide this nominally. So we can go down, this can go up in real terms. They're going to hide everything in nominal terms because they need, from a tax perspective, they need nominally for it to go up. And I don't know if people understand that. I mean, everything that I'm seeing is pretty inflationary here. Coming down, no growing economy without cheap energy. This is crazy here. China's planning on building 655 new coal-fired power plants, while Americans are cutting back on the thickness of their plastic bags by a few microns. 655 new coal-fired power plants in China. That's crazy. Nat gas all-time high 10 days ago. Look at that bad boy reaching up above all those. You can see the night. I think this is really cool. I like this wave of demand. Up, come down, come up. It's kind of cool. You can see the area under the curve is the total demand, you could say, or the which is highly dependent on weather. So you can basically look at this and you could say, well, this is a pretty warm year in 2019 into 2020. That was a really warm year. And then you can see that we had a little bit longer, colder spell last year in 2022 to 2023. It was you could see the length of this is a little bit more drawn out than this spiky one that went spiked up and then came back pretty quick in 2020. But I would suspect that that will hang out for a little bit, February and March. I just thought that was a really cool graph. Scrolling down, KRE on the RENKO. Okay, so RENKO charts, they're not the same as price charts. They basically they look for stuff that I look at. You know those the big green army, the big green candlesticks? The rate of change, that change is what the RENKO charts are basically charting. They're looking to see like the change in the movements. It's not based off solely the price movement. So they're looking at kind of like the change of movement, if that makes sense. So here's a couple of very similar setups here. We'll possibly break of that gold trend line. So let's take a look. This is regional banking. You can see a fractal here, and another fractal that is being created that could be similar. And then you can see how this moved up. 2009 to 2018, and then a pullback. We had another move from about April 2020 all the way up to 2022, another big pullback, and it looks like we're ready to potentially break this downtrend line in terms of the movement, kind of the I'll call it acceleration or velocity. I'm trying to choose between those two. I would say it's the acceleration because it's over time. It'd be force over time. So we're ready to break here, and maybe the pullback is already done. Maybe we already had our pullback in the market that people are looking for. And then scrolling over, looks like you did it twice. So that's a regional banking ETF, and this one is regional banking ETF. You put two of them there. Coming down, the president of Emirates, Tim Clark, has told Australian media that widespread sustainable aviation is not possible without nuclear energy. If you want to get hydrogen, the power that it takes is enormous. You won't get that through alternative sources like solar, wind, etc. Not only give you the power you need for a country, but also give you the power to do all of these power to liquid transformations. An interesting perspective of Australia's ambitious plans to be hydrogen superpower. Yet you have to adopt super high energy return on energy invested, and that's the only way that you can do hydrogen. Hydrogen is a huge energy sink. You put a far more energy in than what you get out of it. It is a energy transmission system. It's a transmitter of energy. It's basically a battery. So hydrogen is a battery, and it's storing electrical energy for the most intensive purposes, and it takes a lot of energy to do that. You can't use a low energy return on energy invested power source to do that because it's too inefficient. He's completely right. SPX, Mom, Heisenberg is drawing bearish charts again. And I want to share the bearish chart side too. Get a full thing. There is a negative divergence here where you have a movement higher at the same time that you're basically slowing down in your strength. Could this fall lower? Definitely could. And this is the S&P 500. And maybe we are putting in a potential top where this turns and goes lower. We'll see. Willem Middelkoop says Royal Bank of Canada copper deficit in 2024, the copper shortages expected after 2025. So What first occurs is a deficit. You eat through your inventories, then you create shortages. That's really the difference between those two. It says supply disruptions point to a copper deficit in 2024. It's basically following the Cobra Panama's closure and other production guidance downgrades. They also expect China's demand to remain solid as infrastructure spending and energy transition sectors offset weakness in manufacturing, and the property sector is propped up by stimulus. The price is stalled near term, which we believe creates an opportunity. Copper supply shortage looming in the back half of the decade. That's being driven by growth from electrification, green technologies. They use a lot more copper, and quality projects are scarce. Equity valuations are in line with historical average levels of where we're at today. And here's the chart of the forecasted deficits basically going forward. This is the October 2023 estimate, and they've estimated that we could go lower in implied surplus deficit. And then we go into major deficit after 2025 and onward. And then 2024 copper outlook. And this is I'm not going to read this, but that's some of the outlook that they've got. It says we have also increased our long-term copper price estimate to $4 a pound from $3.50 a pound. In the late 2020s, we're going to be way higher than $4 a pound, in my opinion. Market Mayhem says we just saw the largest weekly inflow into emerging market stocks ever. That's right, baby. That was me. Yeah, so there's a lot of money flowing into emerging markets, and I think that's probably the right move. It's also at like their 50-year low that I went over last time. Emerging markets are going to do incredibly well, I think, over the next decade. Incredibly well. Here's XOP RENKO chart. Big long-term patterns take time. Currently in a good try to make a long-term inverse shoulder head shoulder. This is the inverse shoulder head shoulder. You're seeing the same thing that I'm seeing. This is obviously a RENKO chart, which is a little bit different than what I chart. I chart the price movements, but this looks good to eventually work its way on up and break to the upside and be an inverted head and shoulders. This inverted head and shoulders, you generally measure the head to the neckline, and then you project it on top of the neckline upward. And that's your projected move. It's probably somewhere up in the mid 300s or something like that. For X, that was XOP. Yeah, you know me. Sorry, guys, I had to do it. Copper could see a comeback as demand outpaces supply. He's talking about peak copper. When do we want it? Now. Copper could see a comeback as demand outpaces supply. Here's URA on the RENKO chart. Thanks, Uselink, for posting up all these RENKO charts. I don't really look at a ton of RENKO charts, so I shared a lot of these. This is URA, downtrend channel being broken to the upside, and we've got a horizontal channel that could potentially be broken here at any second. And remember, we're pricing kind of that force of the movement, so to speak. This chart is fascinating. Highly speculative periods are characterized by investors trying to explain the uniqueness of the current situation, frequently attributing the existing bubble to emerging technological advancements as a justification for evaluations. Notice that this is not to say that these new advancements won't be pivotal for the economy in creating new opportunities. However, if you ask me, these unrealistic expectations have gone beyond reasonable bounds. Credits to Crestcat Kevin for providing such an insightful historical perspective on how today's tech companies are at their current prices appear to be way ahead of themselves. This is the Philadelphia Semiconductor Index versus the S&P 500 Index. Way on up there, like it was in the 99 bubble. And guys, they were doing all sorts of crap in 99. Like they were, well, Enron was just making up future projects, discounting it backwards, and then putting it on the books. And it was okay to do that in terms of accounting. I don't think we're doing that, but the valuations are the same. Complete bubble. The question is, when will it pop? And people will say, well, if I bought it here and I made money, I'm like, yeah, That's dumb, in my opinion. Why? Why would that be dumb to buy it here and be up some amount? I'm like, the risk that you are taking to get this small gain, it's not worth it. It's too much risk for the reward buying it at levels that are up here, in my opinion. I'd want to buy it somewhere down here, wait for this to come, ride it on up, and then sell it somewhere up here of where I think it's a good opportunity to sell. Then I'd rotate it. If there's a good spot in 2020 to rotate into, I'd go buy oil and nat gas, which is all the way down here in these basing patterns that we're doing on the website. And then right where we're at, if you draw a line across, they're all like over here. You've got inverted, maybe like an inverted shoulder, a head, and a shoulder that's developed. You've got some they've got that lead-in pattern where you get in this here is the lead-in pattern if you guys want to know. It's a shoulder, a head, and then they think it's a shoulder, and then it rips to the upside. It's really an accumulation cylinder if you draw it that way. And we've got accumulation cylinders all over the place in commodities. In my opinion, this will top out, and this money is going to be a driver. All these FOMO newbie investors are all going to come over to commodities when the commodity market is starting to go way up like this. They're going to all jump in like here and then push it all the way up to the top. And that's how the markets work. All of the retail guys are over in semiconductors like Nvidia and Google and all the tech companies because they think that this is all new. It's the wave of the future. And I'm just going to say good luck. You're going to get absolutely smoked. Absolutely smoked. You got what I need. So here is Energy Fuel still working on an inverted shoulder head shoulder on a RENKO chart. Just to give you guys some info, and we have a broken down trend line, which is a good thing. We really need $3,000 an ounce gold for the miners to make money. Maybe that's why the miners are stinking so bad. There's another huge thing here. The mining companies, they really need oil and natural gas and electricity to remain affordable. Uh, because if we get a big bull market where those inverted head and shoulders start to move up in oil and nat gas, I mean, it's going to put a lot of pressure on the mining companies' input costs. And we might need gold way higher, way, way, way higher than even 3,000. And keep in mind, a lot of these mines, I'm not saying mines of just precious metals, mines in uranium, mines anywhere, copper. If we get some shortages, I mean, if we're short copper and maybe even aluminum, it's going to be tough to build these mines. We've got high interest rates. Where's the money going to come from, and how expensive is this money going to be? And what kind of uh, employee workforce, in terms of skills and experience, are these mines going to get? I, I think it's going to be tough. I think it's going to be really tough to be building mines, and I think it's going to be incredibly costly. So, in my opinion, when I read this, I mean, this is like picking up stacks of $100 bills in gold. It's like, okay, if prices are going up, I'm going to go buy a bunch of physical metal and then just sit on it. Because if it really is true where it costs 300 or $3,000 an ounce, I mean, basically you get a 50% increase from here where the cost curve is at. I mean, that's just free money if you're patient enough, in my opinion. Not advice. GDX, here's GDX for the RENKO chart. We are still squeezing massively in this big long-term squeeze of the RENKO chart for GDX. Just to give you guys a little bit more RENKO-ness from our boy Uselink. CEO technician, billionaire mining investor Robert Friedland on copper moving into deficit in 24. Everybody talks about their weak real estate market, which is probably 20 to 25% of their economy. But there's military demand, national security demand. And so physical offtake is very strong and inventories are extremely low. So really this is a powder keg to explode as soon as the Fed cuts in the second half. China's cathode inventories now at record low levels of demand cover, drawing destocking to an end. Oh man, that is low for 2023. You can see the inventories drawing. You can see 2022, 2023 coming down to critically low levels. Oh, come on back. And that's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. I got a lot of really good opportunities here, a lot of really good setups, technical wise, and I think we're going to go higher. I think we're going to go higher. But that's what I think. That's what I'll say. And I'll leave it there. Thanks for viewing. This is Finding Value.